Hey there, okay, let's get some basics out of the way, okay, and the basic understanding of how a candle is formed, alright, and just go ahead and use a little whiteboard here for the moment, and let's get our screen draw pen out. Okay, now, I'm not really sure how much depth I should go into the basic candles, but let's just say, alright, first of all, what I'm going to do is I'm going to use two different colours, okay, there's going to be a blue colour and there's going to be a red colour. Now, I'm hoping that these two colours will be good enough for those of us that will be colour blind throughout this course. Alright, so I do apologise if these do not come out too well. But I'm pretty sure that they will. Alright, so let's take a look at this, okay? So first of all, we've got the bulls and the bears, alright? These are what make the market move, the bulls and bears. Alright, now we have two sets of candles. We have up candles and down candles. Okay, and the candle will look like this. Forgive my drawing, but the basic bull candle will look like that. Okay, now this section here is called the body, or what's really referred to as the real body. Okay, and it's this matter right in here. Okay. Alright, so, and with candles, they have an open and a close price. So if you consider stocks, you know, at the beginning of the day you have an open price, okay, and at the end of the day you have an end price. And where that end price is going to be, nobody knows, and sometimes where that start price is going to be, nobody knows. With equity markets, you will find that there are gaps between an open and a close of one candle and an open of a new one. With the Forex, as I say before, that because it's a 24-hour market, you won't really see these big gaps when a new candle opens. Alright, so this is an actual bull bar, or bull candle, and bulls favour the price to go up. Okay, and they have an open price down here at the bottom. This will be the open in the corner, and this will be the close. Alright, these two other opposite corners don't have any names. Okay, and then here you've got this line at the top here, and you've got this line down the bottom. Well, these will represent, the top part of it right there will represent the high. That's actually how high the bulls were managed to actually push the closed line here, the top part of the body. They managed to push it up this high before it came back and closed down to there. Alright, and here is where the low is. Alright, so the market is opened and we don't know whether it came down first. So there was some bearish sentiment there, and then there was started to be some bullish sentiment, and the bulls pushed it all the way up to the high, and then the bears came back in and pushed it down to this close level. But yet the overall sentiment of this candle is derived from the calculation from its open to its close. That's really to let you know who is in power. The high and lows are really basically to let you know as well if there was any sentiment in, the opposite, the opposition for the bears. There was some sentiment there to go lower, but that could have been through the previous candle, okay, that actually made it go lower. We could have been in a downtrend, you see, so that's why it may have came down lower. Or it could have been a failed continuation trend. Alright, we might have had consecutive lows, but this particular low didn't close off lower. It only made a new low, but it closed off higher up here. So this would be basically a bullish reversal pattern, and it will go back up. Alright, so that's how that one looks. And let's take a look at the bears, okay, before we move on. Right, the bears favour the price to go down. Okay. Alright, there's that little bears thing. Okay, so again, the candle pattern, and we in here we have the real body, and then we have the top part and the bottom part. Now these top parts and bottom parts are known as shadows, or they're also known as wicks, or they're also known as a head if it's at the top, or it's known as a tail if it's down the bottom. But for the most part, you can call it upper wick or lower wick or just the wick. Okay, so that's the terminology there. So there's your high. Okay, and here down the bottom here is your low. Alright, now you'll be coming down in a downwards trend, so your open is going to be over here. Over open and see close. Okay, so we could have actually had some sentiment where the market had pushed up to go up higher first, and then the bears came in, pushed it all the way down to the low, and then the bulls came back and pushed it up to this higher. But overall, the bears have won because it gained a majority of that particular move. All right. Okay, so now you understand the basics now of how the candle is formed. We need to understand now that these particular candles, I mean, we could have like another candle down here, and this might not have any wick on it, and then it might have a small one here. This also has sentiment. This is basically to let us know that the market did not go up any higher, and the market came down all the way down to this low. And what that's basically saying is that the market here didn't have any kind of bullish sentiment whatsoever. It didn't make no new highs. Where it closed, it also opened and it just tanked. It just went right down to the bottom here. So this is to let you know that the bears are still in control. Okay. If you have like another one here, okay, although it's made a new low, it's also closed lower as well. This is also very important. You can see that this area here is where it closed a lot lower. Sometimes what's also important is that this low here is also lower than that low, and same conversely. To see a continuation, what we would like to see is to see that these lows are lower than the previous lows. But what's really important as well for an extra strong confirmation is to see these closes close lower than the previous low. Alright, that's really some powerful sentiment right there. Then you might have another one, okay, that would look, it still might be another red candle. It might have closed lower, but this time it might have had a higher peak here. Okay, you might have had a little one right there. Alright, so this is basically what this is letting us. Here is our high and here is our low. We've made basically like an equal low down here, but we did close off lower than the previous close. But there's no market sentiment really to push this lower, although there was some where this close had dropped off. But this here, this move all the way up to the top, well, that is a bullish sentiment. You most likely will see this pattern here drizzle away, and then you'll start seeing some opposite candle colors coming in and start pushing the market back the other way. Now what's also very important before I move on and show you some of the real patterns, okay, is to take note of the support and resistance levels. Okay, this is very, very important. Alright, there's your resistance. Okay, and here is your support. Okay, so when you're having the market move, you want to make sure that when these candle patterns start to appear in the market, you want to make sure that they appear at the right areas. Alright, it's the same with the buy and sell signals that we was going through in module 3, where you only act on the signals when they're based close on the support or resistance level. Okay, here we would actually buy and would look for buy signals, and here we would sell. Then anything anywhere in between, we can buy dips and what have you. We can take advantage of the minor price levels. All right, so to take that into consideration, all right, and always know when the form of how the candles are actually created. There's different ways that the candles are actually shown, which I'm going to show you in the next video. All right, and then hopefully by the time we get into around about the 5th video, things will start to come together and make a little bit more sense. All right, so until then, I will see you very soon in the next video. Bye for now.